Hey everybody, Mike Vacchi, Princetontrader.com, here with today's closing wrap-up for Monday, October the 9th, 2023. There was no morning webcast this morning. Between technical difficulties and just trying to work through all that stuff, by the time we got it fixed, I had enough time to get everything up and running, good to go for the regular session. So let's talk about this tape, and then we'll follow up tomorrow morning with another webcast. So look, we had the band ride. Then we had a little break. Then we had another couple of days. Then you had Thursday. Then you had Friday with the jobs. And that really caught everybody leaning out over the tips of their skis. The last time we talked was before the jobs report. And they went down and they printed that 42 quarter. And we talked about a few levels during that Friday morning webcast, okay? We talked about taking out the Thursday low and the Wednesday low, and then at that point, you'd have to go take out 35.5. Well, they came down, they broke those two lows. This was wide open, and I mean an 8-lane highway wide open, and they blew it. And not only did they blow it, they blew it huge. They blew the 35, they blew these two lows, they blew the 9-day, they blew the weekly pivot, all by noon. Weekly pivot from last week actually holds, and they pop it. The analogy I always give, it's a football analogy, is flipping the field. A really good punt from deep in your own territory, deep into their territory, which is going to make their offense work a hell of a lot harder than they were going to have to if you just shanked another one off your foot and gave them the ball at, the 50-yard line. By putting in the day on Friday that the Bulls did, they were able to begin this week with the weekly pivot underneath them. They, instead of starting every week with weekly pivot as potential resistance, which has been going on for a while, you then had a really nice gap of price between, pun intended, between weekly pivot and where we were going to open, or where we closed on Friday. So, a lot of difficult geopolitical news over the weekend. Boom, they gap it down. They gap it down where? To the new weekly pivot right around 43.13. At that point, they have one job. Take out the roundy, print stuff with 42s on. Couldn't do it. Went through Asia, got into the Europe Open. They printed 99.5, and they couldn't hold it. By the time we opened here, we were dealing with weekly pivot, daily pivot, which is the dotted line there, and this blue line, which is the 9-day, which has been a huge deal, which has been very reliable resistance last week here and here. What do they do today? They turn it into support. Not something like Friday that just got blasted off through like it's not even there. They came back, they tested it, they held it. They held a 9, they held the hourly mid, they held the daily pivot, and they held the weekly pivot. So now, you've blown your opportunity to take out 35. You've created a higher low versus 35 and a rejection back through these two lows, which you had just converted. You blew the 9-day last week. You flipped the field with a weekly pivot. You then, in the light of day, not at 1 in the morning, you turn weekly pivot and the 9-day into support. So you know what you get? You get your face ripped off. I think they caught a lot of people short down here, looking past here. They got ripped. They got confident on the gap down, and they ripped them again. Now you got a higher high. So now if you're the bears, you got a serious problem. And I don't think the answers to any of those problems are going to present themselves before we go and test the green line up here, the 20-day simple moving average of the middle band, to find out, after dealing with lower band, right? Let's go back to the daily chart. How does the index trade? How does the E-mini trade? Upper band, middle band, lower band. Lower band, middle band, upper band. It's just what it does. Inability to get back to the upper band, fails through the green line, which is the mid band, rides the lower band, higher highs, This 100-day, remember it mattered when it broke here. It's going to matter again. And that's 40, let's call it 43.80, 43.82, 43.85. And then 20-day simple, which always answers the question of, are we buying dips or are we selling rallies? So, what is my thing about rallies in down markets? It's still a down market. Square one, we're still sell rallies. You can be long, you can get out of the way, but don't fight it short. So, if you fought Friday short, how'd that work out? And if you leaned in too hard on the gap down and fought that one, how did that go today? Probably not real good. So again, when the market wants to do this, even at a down tape, you can be long, you can stand aside, but don't fight it short. So now we'll have to see. When we get back up here, what's it going to do? If they can't get it back up, well then you got to fail here, get through the 9, turn 9-day and weekly pivot back into resistance, and go back to work on that reaction low from the jobs report. So that's the recap of where the tape is as we stand now. So let's see how it trades tonight. Subscribers, there'll be a very detailed webcast out tonight about how we traded today, what our intentions are into tomorrow, and all the specifics about all of that fun stuff. For everybody else, hope everybody's doing great. I will catch everybody in the morning. Trade them well, safe, healthy, take care. Talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.